Welcome back to Stock Tricks with Nick. In today's video, I'll be sharing my favorite 10 stock setups for the week by breaking down their fundamentals, group strength, fund ownership, and technical setups. Last week, the market sold off aggressively, and the major indexes are now living under their 50-day moving average. We did have a nice rebound day on Friday, with the S&P 500 up 1.2% and the NASDAQ up 0.6%. This is not a time to get aggressive, and I want to make it clear that the setups that I showed today are just that, quality setups. Without the market trending in the right direction, your win probability on any trade will be low. Personally, I'm 100% cash right now, and I plan on staying that way until the leading stocks find support and breakouts hold their moves. With that disclaimer out, here are the 10 stocks that we'll be covering today. If I share a setup that fits your criteria, please help me out by smashing the like button and subscribing to the channel for more trading content. Let's get into the charts starting now. All right, first we'll start with AFRM, Affirm Holdings. This is the stock that jumped when they announced their Amazon partnership and then jumped again on earnings. It has been a true market leader, kind of putting in the cup to this IPO base here. We got a group strength rating of B, 65 out of 197 in that finance credit card payment sector or group. Composite rating in that group, 16 out of 38 stocks. Relative strength in that group, 4 out of 38. This stock does have a relative strength rating of 94, especially with the market how it is. I'm really trying to focus on stocks with the highest relative strength. Accumulation distribution, B+, composite rating 64, just because it's on the lower end of earnings, but does have good sales numbers, up 98%, 57%, 67%, and 71%, but is still working on profitability right now. For fund ownership, we only have 2 quarters and we decreased in fund ownership, but again, that was before the Amazon partnership, so maybe that turns it around for AFRM. Now looking at the chart and measuring this pullback, we had a pullback from high to low of 68%. That is typically larger than I would like to trade, but because of the Amazon news, because of the volume coming out as we're breaking out on the right side of this cup, it's a stock that I want to be watching for. Let's measure from the low to the high here. We had a 139% move from the low to the high. Since then, we've pulled back 17%. So it doesn't quite qualify for the high type flags that I like to trade because there is this pattern where traders were trading in this area. It's not a 100% move up with no resistance up top, but it is a strong move with good news on good volume. So checking a lot of the boxes there. Since then, since the top, we've pulled back that 17%, had a double inside candle day. So Thursday was inside of Wednesday's candle, Friday's candle was inside of Thursday's candle. That's showing volatility is actually decreasing while the market is acting kind of all over the place. So nice consolidation. We're consolidating above the 8-day exponential moving average, above the 20-day simple moving average, the green line, and above the volume shelf. So there's decent amount of support in this area right below. So with this, I'd be looking for a break over Friday's high, 119.85 as a possible buy point. Again, with the market weakness, this is just a possible stock to trade, one of the better ones on the market right now, AFRM. Next, we have a returner from the Breakout Watchlist from last week, AMBA. I also made a YouTube short about this. So just going through, group strength rating, A+. It's 7 out of 197 out of the groups. Within the group, it is the strongest on the composite rating, a strongest on the relative strength rating out of the 29 stocks that make up that group. It's got a relative strength rating of 97, an accumulation distribution of an A+, and an overall composite rating of 99. Doesn't get any better than that. The recent 2 quarters had earnings per share up 475%, 483%. Sales have been accelerating, going from -17, +9, +28, +56, and after-tax profit margin also accelerating 6, 8, 12, 17%. Fund ownership also accelerating, going from 347 last June to 471 this June. So checking all the fundamental boxes. Zooming out on the AMBA chart, you can see a nice strong breakout, about 170%, 180% from September to February. Then in February, we got the sell-off of all the growth stocks. This put in a nice base all the way up till September when it had that stellar earnings report, the 483% earnings per share growth. So we had a nice pop. Let's measure a little bit below earnings all the way up to the top here. So 90% up, pulled back 11%. That does qualify for the high type flag setup. So especially in a market like this, that's something that I want to keep an eye on. This is only down, what did I say, 10%? Yeah, 10% from the highs here. A little bit below the 8-day exponential moving average, which is caught up, but still above the rising 20-day simple moving average. We have a nice volume shelf putting in with these 4 days. Now, is this just a kind of a bear flag before another move down? Maybe. But that's why we're buying with the break out, with a break up, because we want to be buying on strength, not weakness. So if this does break out, I'm looking for a break of Wednesday's high 158.12 as a possible buy point right through this area. That would get us back over the 8-day exponential moving average. And with any of these trades, I want to be looking for high volume as it's breaking out. I don't want to be the only one buying. I want institutions buying. I want the market kind of turning around at that area. AMBA. Next we have CALX, CALX. This has got a group strength rating of B+. It's a 60 out of 197. And within that group, it is the third strongest composite rated out of 14 and second on a relative strength basis. It's got an accumulation distribution rating of B, composite overall rating 94, obviously very strong there, and a relative strength rating of 94. Starting to see the pattern with the relative strength numbers that I look at. Earnings per share, incredible, up 567, 400, over 1,000, 171. So last 4 quarters, year over year, all over 100% increase, which is great. Sales up 31, 41, 59, 42. Earnings per profit margins up 17, 17, 16, 15, all increasing. Good to see. Fund ownership on CALX also increasing from 283 last June to 421 this June, and in a steady climb. Going to the chart, this stock has been basing since March, so let's see, 131 trading days or so before this nice breakout. We had a false breakout and then reversal with market weakness on the 17th. And then finally, we pushed through on heavy volume, good closing range, got the follow through day the next day, and then the market just really started pulling back. So we get this malfunction bar right here. But since then, we've had higher highs, higher lows on Thursday and Friday, when Thursday was a tough day in the market as well. Friday we did see some strength, but we got good volume on the way out. That malfunction bar does have a good amount of volume, but this is a stock that is kind of sitting on its base breakout and holding up good relative strength while the market is weak. CALX. Next we have CMRE, incredible group strength, A+ rating, 4 out of 197. It's in that transportation and shipping group. And within that group, let's check here, 4th strongest composite rating out of 27 stocks. Relative strength rating lower because that industry is just so strong. If we check the relative strength rating, 96, that should put you right up there. But this industry just has been that strong. So it's something that we want to keep an eye on and keep any money that we can in the market in these strong groups. Accumulation distribution rating, B, composite rating, 98. Does have kind of a turnaround situation with earnings per share going from -15, -16 to +15 and +81 this most recent quarter. Sales have been increasing, going from -13, -4, +4 to +50, and then after-tax profit margin up around 30% quarter over quarter. Fund ownership on this has also been increasing, going from 186 last June to 243 this June. Going to the chart, we have this nice strong breakout, 72% up, a pullback of 14%, so not quite a high type flag, but this kind of strength is definitely not to be ignored in the market. Now the stock is flagging out nicely. We do have kind of 1, 2, 3 daily highs all hitting the downtrend line here, so breaking above that downtrend line could be a possible entry point if we kind of trade down to the right during the first half of the week and then break the downtrend line later on. What I'm looking at is we're building a good volume shelf right around where the price is at now. Volume is lightening up, ATR, average true range, is tightening up, so the price range is tightening, volume's tightening, we have good relative strength in a good, strong group. So looking for a break over Friday's high, 1601 is a possible buy point. Next we have CRC. This is an oil and gas, which has been an incredibly strong group as well. Group strength rating A+, 3 out of 197 groups. Within that group, it is the 22nd strongest stock on a composite rating, but the 19th strongest on a relative strength rating. Similar to the shipping group, it shows 19 out of 59. We're always trying to look for the strongest 1 or 2, but this has a relative strength rating of 97, so that's obviously very strong. Accumulation distribution rating, A+, composite rating, 94, checking all the boxes there. Earnings per share, last 2 quarters have been up pretty heavily, up 863 year over year, and then 123. Sales just starting to kind of flip over, -40, -51, -37, and then +10 this most recent quarter. Fund ownership, let's check that. We went from 0 funds in September of 2020 to 286 this June with a nice steady climb there. So looking at the chart, we had a 79% move up from the low of the base here. We had good volume as it was rising. Since then, we've pulled back only 10% or so. We're sitting right on that 20-day simple moving average. The 8-day exponential moving average is also tightening up right around that area. I didn't take this trade on Friday. We had these two candles where a break over that could have been taken on Thursday. I'm sitting 100% cash right now, trying to let the market firm up first. But this is a stock that's only down 10% after an 80% move from the low of the base and is showing good relative strength in a good, strong group. So a break over Friday's high, 42.77 is a possible buy point for CRC. As much work as I put in scanning for the best setups, it's possible that I missed a few along the way. So please help me out by commenting your favorite setups going into the week that I didn't mention in this video. Thanks for your help, and let's get back to the charts. Next, we have one of the true market leaders in DOCN. This has a group strength rating of A+. It's in the computer software group, which is 14th out of 197. Within that group, it's the 24th strongest stock on a composite rating out of 110 and a relative strength rating of 7 out of 110. It's got that relative strength in the 90s, like what we want to see, with a 96, a good accumulation distribution rating, B+, and overall composite 83. This one has been increasing in sales, 24, 26, 29, 35. Earnings per share, still negative. Profit margins, still negative, so it's still working on that. Fund ownership, we only have 2 quarters to work off of, but it did increase, basically doubled quarter over quarter from 92 to 186. This stock saw an extreme breakout, 80% from the low here after the pullback, undercutting the 50-day simple moving average and then ripping higher. I did take this trade a little bit earlier in here, sold into this green bar, which in hindsight, I sold too early, but you never know. So taking profits on the way up is always a good thing. We had a pullback, let's measure, about 15% from the high. Because it hasn't broken over 90% in 8 weeks or less, it doesn't qualify for the high tide flag, but obviously still very strong. We pulled back to that 20-day simple moving average, and then what I really like about this chart is Friday's candle. Friday, we undercut the lows in this pullback, shaking out anyone who got in on Wednesday, and then from there, we turned it around, closed in the upper quarter, upper fifth of the trading range on Friday on an increase of volume, and we're back over the 20 and the 8-day exponential moving average. So with this, ideally we see a couple consolidation candles, let this flag out a little bit more, and then take a trade over Friday's high, 81.81 for DOCN. Next, we have another returner of the breakout watch list, LAC. This one doesn't have much fundamentals to go off of. It's got the group strength rating of a C. It's 122 out of 197, so not a very strong group, but it is the 8th strongest stock on a relative strength basis out of 37 in that group, and it does have the relative strength rating in the 90s with a 94 rating. Accumulation distribution, B+. We got some good volume on the right side of the base breaking out here, but because of the earnings and sales numbers, only looking at a 50 composite rating for LAC. So everyone sees what I'm seeing, right? A nice big cup and then starting to put in a handle on this. And if we draw a downtrend line, we have this hitting the highs of 3 daily highs, or this downtrend line hitting the highs of 3 daily highs. And we're consolidating. We got the 8 and 20 day right at the same price. We're at the volume shelf that's been built out here during the pullback. And we had lighter days pulling back than the breakout days. So a lot of buyers and fewer sellers on this. So with this, because of Friday's candle, we had an inside candle on the upper half of Thursday's kind of bounce back day, which came on heavy volume. This is why I'm putting it on the list. Very much a technical trade instead of fundamentals, but looking for a break over Thursday's high, 22.64 as a possible buy point for LAC. Next, we have TROX. This has got a group strength rating of A-. Is in the chemicals and specialty group, which is 40th out of 197 stocks. This stock is the #1 composite rating in that group and 5th on a relative strength rating. Has that relative strength rating in the 90s with a 95 here. Great accumulation distribution with a B+, or not great, good accumulation distribution rating with B+. Composite rating 99, that is great. Earnings per share has kind of flipped over, went from -76 to +36, +48, and then plus over 1,000% increase, which is incredible. Sales, same story, -12, +13, +23, +60, and after-tax profit margins accelerating with 1, 3, 7, and 10. Fund ownership on this guy went from 268 last June to 441 this June, so increasing and doing so steadily. Looking at the chart, we have a nice cup and then putting in the handle here. Let's measure this pullback. So that went 11% from high to low, second pullback, 5.5% high to low. And then we did break over this kind of what could have been a 2-day pivot on Friday. I didn't take that trade. But you're really starting to see ATR, average true range, measures volatility, drop down. We're seeing relative strength compared to the market, compared to the QQQs, increasing. Volume drying up as this is trading sideways, respecting that rising 8-day exponential moving average. So on a technical basis, this is checking a lot of the boxes. So what I would be looking for is a break over the high from the 28th, which is 25.57 for TROX. Next, we have Tesla, TSLA. This is one of the large liquid leaders that is showing relative strength compared to the market right now. It's got a group strength rating of B, 73 out of 197 groups. Within that group, it's the #1 composite rated stock and #5 on a relative strength basis. This is one of the few stocks that is under a 90 relative strength rating, 86, just because it's starting to climb the right side of the base and it had such a strong move up into January that it's just going to have a lower relative strength compared to the market on a yearly basis. But recently, it has been showing good relative strength. It's got an accumulation distribution rating of B+ and a composite overall rating of 97. Earnings per share is up 105, 95, 304, and 230. Nice to see. Sales, 39, 46, 74, 98, acceleration of sales, and after-tax profit margin increasing by about 10% each quarter. Fund ownership on Tesla has also been increasing, going from 1648 to 2812. We all remember 2020. Tesla was a true market leader. Where Tesla went, the market followed. And in January, when Tesla started selling off, a lot of the growth stocks started selling off as well. But this took a little bit longer to build a nice base, which you like to see. After a move that we saw in 2020, a 40% pullback from high to low in the base is not an aggressive pullback. That's pretty constructive, although it might have hurt people who bought right at the high here and didn't set stop losses. This is what you kind of want to see before a next move higher. So recently, this is starting to have breakout days after 2 or 3 consolidation days on increased volume, and the pullback days have been on lighter volume. So Friday, we had a pullback under the lows of the most recent kind of pullback, so shaking out all the traders there. And then we rallied into the close back above the 8-day exponential moving average. And again, lighter volume on the pullback compared to the breakout day on Monday. So with Tesla, you could just treat this as a pullback buy with a break over Friday's high, 780, 78, or wait, let it consolidate, let the market show its strength, and then a break over 799, a break into 800 is a possible buy point. And last, we have the true market leader of 2021, Upstart, UPST. It's got a group strength rating of A+. Finance consumer loans is the second strongest out of 197 groups. Within that group, it is the strongest stock in the composite rating, strongest on accumulation distribution, and strongest on a relative strength basis. Relative strength rating of a 99, accumulation distribution of an A, composite rating 99, checking all the boxes there. Let's check earnings per share. Had this one quarter where it was minus 88, but we went plus 1,000, minus 88, plus 340, plus 1,000, over 1,000. Sales up 32, 39, 40, over 1,000. After-tax profit margin also exploding, 15, 1, then 16, and then 30. Fund ownership on this has also been basically doubling. So 53, 151, 240, 239. Nice to see a lot of big money flowing into the stock. Looking at the chart, this started with an earnings gap up around 30%, and then this has just taken off. Really respecting that 8-day exponential moving average. You can see every time it pulls in, it respects that, never breaks under that line. Even the most recent pullback here, it pulled back to that area, but buyer stepped in right on that moving average. And I actually took the trade right through here on this breakout candle. So we had a move up 160% from that breakout point, and now we've pulled back from high to low only 18%. So that does qualify for the high type flag setup, the one that I really like to trade, and it's an IPO, and it's the true market leader. So this is really aligning everything that I'm looking for. On Friday, it had basically the roughest day since it's broken out, down 5.6%, but it did pull back even more, down 4.4. Buyers stepped in under the 20-day simple moving average, and we closed right on that area. I want this to kind of curl down, really flag out, and then maybe we can find a trade on this downtrend line, or it puts in a 2 or 3 day pivot point where we can get in. But out of all the stocks that I talked about today, This is the one that I really want to get my money into once we see that consolidation, once we see a low risk entry point set up, because again, this is the true market leader of 2021. All right, that's gonna be the breakout watch list for the upcoming week. If you enjoyed the video, smash the like button and subscribe to my channel where I make these breakout watch list videos. I go live on Tuesday night to break down any stocks that you want me to look at, and I make other personal finance themed videos. Last week, I just posted the first ever episode of Money Talks. This is a series where I try to take the taboo out of talking about money so we can all become more financially literate. In this episode, I interview my old college teammate, Dan. He explained how he got out of $18,000 of student debt in just 6 months and what's next on his wealth building journey. Have a great week and I'll see you Tuesday.